enablers in this segment. We start with KMRC, which is a refinancing mortgage, and I know my colleague Geoffrey in the sector will be talking to us about the key interventions that they are making that are making it possible for banks, SACCOs, and other financial institutions to offer affordable mortgages because finance needs to be affordable for people to be able to access these units. The government has also introduced tax incentives and even enablers around property and other support that is enabling developers enhance the supply of affordable units into the market, both from a government sector or government project, but also from a private sector developers. They've made it easier for building permits to be obtained, the planning permissions to be accelerated, and that has begun a whole and a huge body of new developments, both in the private and, as I said, in the government sector, to develop these housing units. I was in a forum a few months ago where I think the president set a target to Ngatia and the State Department of Housing to be launching a project every month, and that's really ambitious and really showing the big strides that we're making. I look forward to hearing more about how that is going. As I mentioned, the government is also very active, directly developing housing estates. We know one has been launched, has been completed and in fact occupied, and many others that are launching all across the country for this. The impact of this can be significant in the growth of our economy. Some estimates say by as much as 7% additional growth in the GDP. There's still much work to be done. The banking sector has also been catching up quite quickly, particularly critically providing finance that enables those that do not have the money in cash. And housing, as we all know, is a significant financial step that many people make. In fact, some say that this is the most significant financial decision most households make in their lifetimes. Banks have been stepping up to provide mortgages, simplify the processes, and lower the costs of accessing finance for customers that would be then able to access these housing units. It gives me a lot of pleasure to say that NCBA has announced the launch of our affordable mortgage product, offering two solutions. One that offers until 105% financing, which simply means the customer doesn't need any cash upfront to put as a deposit to be able to access the house. We accommodate that up to 105% of the value of the house, and for which we charge a rate of 9.9%, which again is in line with the expectations that affordable mortgages need to be in the single-digit level, meaning below 10%. The second is one that offers 90% financing over 20 years at a rate of 9.5%. So we've also taken a risk-based approach for those that are financing more, and for longer, 25 years, we charge 9.9% and 9.5% for those that are taking, making a higher contribution. We believe this proposition is a compelling one. It is the first one of its type in the market where we are offering two unique solutions and not just a one-size-fits-all in the market. And we believe that it will be an additional enabler to developing and executing and achieving this dream around providing Kenyans with affordable housing. We believe the market is big. We believe the competition is to be able to convert as many people as they can. And so we are excited to speak about it today. You will be hearing a little bit more about it from Stella later on in the discussion. So I thank my panel that have joined us, the two experts in the sector, both from an enabling and a policy perspective. I'm excited to hear what your thoughts are, and for your contributions, I thank you in advance. And I look forward to a productive discussion and many questions and engagement from our audience who have joined us today. Good morning, everyone, and I pray that we all have an excellent conversation. I'll hand back to Philip for the rest of the program. Thank you very much.
Thank you. Thank you, Tyrus, for those great insights and, of course, for amplifying the context of what we intend to discuss this morning, and equally for reaffirming that NCBA aspires to be a financial partner that inspires growth. Well, ladies and gentlemen, allow me just to jump into our panel discussion. And I think in no particular, let me just start off with Mr. Moura from KMRC. Mr. Moura, the Kenya Mortgage Refinance Company is a key player in the push to increase homeownership in Kenya. And our interest is just to know, how is KMRC supporting affordable housing plan on the government side, and primarily on the demand side of this particular conversation we are having today?
Thank you, Philip, and good morning, viewers. Just to set the context, I'll just give you a brief background about KMRC and why KMRC. KMRC was established in 2018, primarily because of some of the gaps that were noted in the mortgage industry or the housing sector. A study was conducted in the year 2016-2017, Government of Kenya and the World Bank, and it established that there was a big gap in the mortgage industry, and this gap was primarily because of the barriers that were identified. There were entry barriers to market, which made customers not be able to afford decent or affordable homes. And because of that, one of the key, the fundamental gap that was noted, there was a mismatch between the asset and liabilities in the financing aspect. And what that meant then is that the financial institutions were getting short-term deposit and trying to use that short-term deposit to fund long-term mortgages. And what that meant then, there was a premium that the institution then were putting into this to be able to manage the risk. And because of that, then a liquidity facility then was mooted. And this liquidity facility is what KMRC is today. And essentially, the liquidity facility was a PPP. These are private-public partnership between the government of Kenya, the banks that are regulated, the SACCOs that are regulated in this market, and the financial institutions that are the DFIs that focus on developing the markets in this region. And essentially, when you look at the banks, the SACCOs and the DFIs that participate in this, we will have 23 shareholders, where the government owns 25% and 75% is owned by the private sector. These are the banks, the SACCOs and DFIs. So we have very strong institutions that are supporting KMRC, and these are shareholders. And within the 23 shareholders, we have 20 shareholders who are participating. Participating means that they are able to access funding from KMRC, and this funding then, because KMRC is a wholesale institution that advances funding to these 20 institutions so that they're able to on-lend to their members. So essentially, that's how KMRC is structured. And so far, when you look at the development of this market, is that we've been able to push down the cost of lending, because essentially when you look at the funding that KMRC is offering in this market, all KMRC funded loans are below 10%. 10% means this is actually affordable, and they are long-term, because the loans go up to 25 years, and the interest rate is fixed. So when you have an interest that is fixed in this market, it gives you a peace of mind as a customer, so that you're able to plan your finances adequately, and you're able to project your repayment. The repayment does not change for the period of the loan, and with that, then you're able to plan your finances. So those are some of the aspects that KMRC is actually playing this aspect. And in addition to liquidity facilitation in this market, we also play a very critical role of developing the market. How do we develop the market? One of the things that KMRC is currently doing is standardization. That with the standardization of the mortgage origination processes, you are able to bring uniformity in this sector. And when you bring uniformity and you find that all institutions that are participating are able to generate and process loans in a uniform way, then you'll be able to advance now to the second level, which is now to have the asset-based mortgages, where you can put these mortgages in a pool and you'll be able to sell in a secondary market, and the institution will be able to raise more funding and actually expand the market even further. The other thing that KMRC is also doing is to promote a greater competition in this market. You realize it's a very unique model that KMRC has, where we have banks and SACCOs participating on the same platform to offer affordable mortgages. Previously, these SACCOs were not offering mortgages to their customers, and therefore, by bringing them on board, we are able even to expand the offering that KMRC has. So we are able to reach more customers, because when you look at the statistics, and I'm happy, Philip, you alluded to a few of the statistics, home ownership in Kenya is very minimal, because when you look at the penetration rate, we're actually sitting at around 21% home ownership in the country. And with that, you are looking at 77% of urban dwellers are on rental. When you go to the rural, I think it's a bit deeper, because you have around 86% of the Kenyans who own in the rural setup. And that is primarily, you understand, because there is a lot of inheritance of land. And of course, most of it is agricultural land. And therefore, when you have an agricultural land, definitely it follows that you have a home that, that you have around there. So these are some of the metrics we are looking at, and how can we then turn around this and even make this, home loan become a bigger contributor in the economy. Because currently, when you look at the GDP contribution, the mortgage industry is contributing around 2% to GDP, which is a very low penetration, as opposed to other markets. When you look at South Africa, they are in the range of 25%. When you look at the, Nigeria, they are 21%. So these are some of the things we are looking at. How can we then grow this? And that is the reason why we are here today with the NCBA, to promote and educate our customers on how they can access affordable homes through KMRC funded facilities. Thank you, Philip.
Thank you, Maura, for those great insights just around the mandate of KMRC, and of course, sharing with us the statistics around rental space in Kenya today. And of course, also alluding to what KMRC is currently doing to increase availability of affordable home loans to Kenyans. I think at this point in time, I want to invite Mr. Ngatia. Mr. Ngatia, we know that the government identified provision of affordable housing as one of its main development priorities, alongside manufacturing, universal healthcare, and food security. Perhaps you could just lend a perspective into how the government seeks to realize the housing goal, among other strategies, of course, while at it addressing challenges in the domestic mortgage market. Take it away, Mr. Ngatia.
Thank you. Thank you very much, Philip, and good morning, everyone. Let's start off with what is, I think, now well known, which is that there is a shortage of affordable homes. There is a lot of demand. We are all looking for decent, high quality homes to live in. However, the supply has really been a challenge. In the past, I think only 1 or 2%, like you said, Philip, of the units that are built in any year are catering towards affordable housing. And that has led to a gap or a deficit of about 250,000 units that are required every year. So you can imagine that's 200 or 200,000 units this year, another 200,000 units next year, and the year after. And this is as a result of the various elements that you mentioned, be it rural-urban migration, and as our young population gets older and leaves school and start to go out on their own, they all want a decent place to live. Now, despite that challenge, despite that that's the clear demand, I mentioned that supply has been a challenge, and supply has been a challenge for really two reasons. The first is that there has been concerns about buyers. Do the buyers who are looking for this housing, do they have the financing? And I can tell you that in the past, the answer was no. There was a lack of affordable finance for people out there. I think our mortgage market is still quite low. I think we have under 30,000 mortgages in a country where our working population is about 20 million. That tells you a lot, and it tells you why the government focused quite a bit on trying to solve this solution together with the banking sector through the Kenya Mortgage Refinance Company. But also on the supply side, the cost of construction was very high, meaning that if you are a developer and you're going out there to build houses, inevitably, because everything is so expensive, you will end up building more middle-income, higher-end housing rather than affordable. So the government had to try and solve these two problems. On one hand, the lack of affordable financing for buyers, and on the other hand, the cost of construction and actually the aggregation of demand for developers, because we have to work together to solve this housing challenge. So what has the government done? What is the government doing right now? So the first thing is, like has been mentioned, housing was identified as a key area of focus for the government. And what that does is that it ensured that there was a one government approach to the provision of affordable housing. So no longer was housing simply the responsibility of one ministry, but it became the responsibility of all. So you see that the Ministry of Housing works very closely with the Ministry of Water, works very closely with the Ministry of Health, with the Infrastructure Ministry, Transport, to ensure that when we're building, that all the various elements that make a house or a community livable are in place. So it is not a standalone exercise. You have to ensure that everything that would make a house attractive, not just in terms of cost, but also in terms of the living standards are there. So the whole of government was focused on the provision of housing. For the supply side, what was most important, and when I say supply side, I mean the developers, what was most important was to make affordable housing an attractive investment, to encourage them to build these houses at an affordable rate. And so what the government has done, the first thing they did is identify suitable pieces of land across the country. This is not just in urban areas or not just in the cities, but really in all counties. And this land is being provided for free for the development of affordable housing. It is, like I mentioned, allows the government to essentially make the housing program spread out across the country and not just in one particular or a few particular areas, because the need for housing is a countrywide challenge. The second thing the government is doing is providing the infrastructure required to make those pieces of land suitable for development. It is not very useful if you have provided a piece of land that is very far out, that has no roads, that doesn't have water or power, because then if you're a developer, you may build, but no one will come to buy. Or you may decide, fine, I will also put in the infrastructure, but what that will do, it will increase the cost of the entire project, which will be passed on to the end buyers, and thereby negating, or it will go against what we're trying to do, which is to get the cost per unit as low as possible. So the government is providing this bulk infrastructure, again at no charge, to make these land parcels viable and attractive. Now, the third element that the government is putting on the table, as has been mentioned, are the tax incentives. And here, the primary one are, actually there are two. The first is the VAT exemptions. As you know, right now in our country, we have 16% VAT on any purchases, even on services, which means that if you're going to buy a bag of cement, there's the cost of the bag, and then you have to load up the VAT. What the government has done is that it has waived that VAT for inputs required in the construction of affordable housing. So there alone, you can see it brings down the cost, because the developers would pay less for what they are trying to purchase, and then that benefit is passed on to the consumers or to the buyers. Now, speaking of the buyers, it has already been mentioned that the government has focused on providing long-term financing through the Kenya Mortgage Refinance Company, which refinances, works with the commercial banks like NCBA, our hosts here, and allows them to provide long-term mortgages at single-digit rates. We've heard NCBA talking about 9.5% and 9.9%, which is below 10%. This is a testament that this intervention is real. And, I think the NCBA team will tell us that they are open for business, for people to actually come and apply for these mortgages. And combined with what the housing ministry is doing in terms of encouraging developers to produce units, the two come together very well. The other thing that the government is looking to do is to essentially consolidate or aggregate all buyers into a single platform, which is called the Boma Yangu platform. Boma Yangu is the platform, it's over the internet where Kenyans can register their interest for affordable housing. They can then start to save into this platform so that they eventually can select units and get allocated these units. Now, typically, we would expect that before you can select your unit, you need to have saved up to about 12.5% of the value of that unit, and that is in the form of the deposit. And then for the balance, say 90% or 87.5%, you then now either bring your own financing through the banks or through the SACCOs and the likes. One more thing that I forgot to mention on the demand side and what the government is doing is that they have also waived the stamp duty, which means that you don't have to pay the 4% on top of the cost of the unit. Again, trying to bring the units as cheap as possible. Now, there are over 100 projects in the country right now ongoing. Mr. Mwiriga mentioned that not too long ago, we were set a challenge, and the challenge wasn't a project every month. It was a project every 2 weeks. And I can tell you, it is what you call a stretch goal. It has kept us extremely focused on the task at hand, working very closely with the private sector, working closely with the banks and the developers to ensure that this is done. These 100 projects are on both public and private land. I think the total number of units combined are almost 550,000 units. So there's certainly enough supply that is coming on board to match with the financing that the financiers like NCBA are offering to you. In terms of the unit typologies, these have more or less been standardized. So you have 1 bedroom, 2 bedrooms, and 3 bedroom units. These units are roughly about 50,000 shillings per square meter in terms of sales price. So a 1 bedroom unit, which would be about 30 square meters, if you multiply by 50,000 per square meter, comes to about 1.5 million per unit. A 2 bedroom is about 40 square meters, which will be about 2 million shillings. A 3 bedroom will be about 60 square meters, which is about 3 million shillings. Now, these prices have actually been demonstrated. If you look at the first project that the government did in the Ngara area, a place called Park Road, a 3 bedroom unit was going for about 3 million shillings. That same unit, that same size of unit next door, without any of the government interventions, was closer to 6.5 million. So you're seeing that we are able to, through all the interventions that I have mentioned, to go lower than, almost lower than half of what was being offered previously. So, to combine with all these interventions, combined with the banking sector, we are well on our way to delivering towards this goal of 250,000 units per annum. And, we just want to highly encourage yourselves as customers of NCBA to take advantage of NCBA's offering and be one of the first to select your units once they come on stream. So thank you very much, Philip.
Okay, thank you, Mr. Ngatia, really for reaffirming the government's commitment to making affordable housing program the centerpiece of all efforts. Was also just talking to us about Boma Yangu and the different projects that the government is putting up within the affordable housing space. And of course, just trying to tie in how KMRC comes into the conversation, and of course, how NCBA equally plays into finance the off-takers of the different units that the government is putting up. Ladies and gentlemen, it now gives me great pleasure to invite Stella from NCBA to just say a few remarks on our product offering around affordable housing. As you've heard, Mr. Ngatia has alluded to the units being produced by the government, being put up by the government through State Department of Housing. Then, of course, NCBA coming in to plug in to that space. Go for it, Stella.
Thank you. Thank you very much, Philip. Good morning, ladies and gentlemen. My name is Stella Mutai, Head of Property Finance at NCBA, and I'm glad to be here and engaging the team of experts that Jeffrey Mara from Kenya Mortgage Refinance Company and Gate Kirungie from State Department of Housing, that's Housing Advisors, the State Department of Housing. I know affordable housing is a very emotive topic to us, and it's something that is a topic that has been in our minds for a while, from 2018, when the government launched the affordable housing program. So different countries have different definitions on what is affordable housing, and I'm glad our panel of experts have been able to answer the question, especially on what Gati has been able to highlight. In the Kenyan perspective, the affordable housing was launched in 2018 to ensure Kenyans have decent roofing. Actually, the main aim was to ensure that Kenyans have decent roofing over their heads, and noting the gap that has been there in between supply and demand. And I'm glad that Ngati has been able to highlight on that. How did we get here? How did we get to affordable housing? I know we had some challenges here and there. One, there was no supply in the market. We can now be able to see more supplies coming into the market, and also increased population. You note our Kenyan population is growing at a rate of in between 4 to 5% on annual basis, and this means now our people will need housing. So that's why now the affordable housing program had to be launched. And also there's a rural urban to migration. You note that more Kenyans are moving to the urban areas, and now initially we thought that urban areas was only Mombasa, Nairobi, and Kisumu, but now we have the county governments which have come up, and you see people now moving to the county headquarters to be able to get opportunities that have come up with the devolved governments. So with this, now we find that now there is shortage of housing, and I'm glad that now we have the affordable housing that is able to be a stopgap for this problem that has been there. Then if I can able to put into perspective some of the numbers that have been put by the Kenya National Bureau of Statistics, you know that 28% of Kenyans' population is urbanized, meaning they live in urban areas. And this is not, as I've said, this is not only in Nairobi, but also in other counties. Home ownership in the urban areas is only 22%, meaning we have more renters than owners. And approximately, it has been the Center for Affordable Housing. I've said that approximately 3.6 million households rent their primary homes. That means 3.6 million Kenyans or households, they live in rented properties. According to the 2019 census, the population aged in between 15 to 29 account for 26% of the total population of Kenya. And this is expected to put pressure on the existing housing supply. It has also been estimated by 2050, we should be able to, in between 2030 and 2050, the Kenyan population should be ranging in between 60 million to 60 to 70. So with this now, you find that now also the housing or the existing properties or the existing housing supply there'll be so much pressure in it. Then estimated that 60% of the population are living in urban areas. And then, I know Gacha mentioned this, we currently have 28,000 mortgages across the banking sector, and within a total population of 23 million people. These 23 million people are people who can be able to get into financial institutions and access mortgage financing. However, this is expected to change as Kenya Mortgage Refinance Company will be able to be providing financing, and I'm glad as NCBA we've been able to partner with Kenya Mortgage Refinancing Company to be able to finance as many people as possible to be able to access their properties. Then from that data, we find that we have opportunities both in demand and in supply. In demand, you find that there's a very high demand of properties below 10 million. Most Kenyans are, and even from the inquiries that you keep on getting day-to-day basis, you find that people are asking, where am I able to get a property that is below 10 million? So there is a big opportunity that exists in the demand sector. In the supply, the government or the State Department of Housing is now coming to be able to bridging this gap. And we know that we'll be able to see more supply coming in the market. And we're already seeing quite a number of properties. So with this background, you ask yourself, does NCBA support customers to acquire properties under the affordable housing? The answer is yes. We have solutions. We have exciting solutions that are tailor-made to be able to help you be able to acquire properties. One, we have our home loans, and from our home loans, you can be able to borrow as high as up to 105% financing for you to acquire that property. If, for instance, I want to borrow to take a loan for up to 25 years, the bank or NCBA will be able to advance you a loan up to 105% financing. If I want to buy and build, and this is whereby I mean, I want to buy a piece of land today and simultaneously construct, NCBA will be able to finance you to be able to construct on that house, depending on your taste and preferences. We also have our construction loan. Our construction loan, this is where you already have your designs. The bank as NCBA will be able to finance you to be able to construct your house according to your taste and preferences. Then also we have NCBA Easy Build. The Easy Build, as the name sounds, is a product whereby we make your work easier as our customer. This we provide the designs, we provide the construction team. It's a consortium composed of an architect, quantity surveyor, and engineers, both structural and architectural. So when we provide these professionals, we make your work easier, whereby we have already vetted these partners, the construction team, and we know very well that they'll be able to construct according to the house that you've chosen. Other than that, also we provided as a bank, our primary role is now to be able to provide the financing. So with this now and our affordable housing proposition, we know our customers are able to get the products. Also, what we've gone ahead to do is to be able to partner with developers in the market. One of the questions that comes up is, where are these properties? And what we have done is we've put together a list of properties that you as a customer can be able to choose depending on your budgets. So we have properties in Nairobi, we have Nairobi, Mombasa, and even other counties. We have partnered with better developers, and all what we need to be able to ensure that we have done a due diligence of these developers, and the product or the unit that you'll be getting, it's a clean one. We've also partnered with the State Department of Housing, and we've plugged into Boma Yangu platform, so as we can be able to ensure we're able to finance anyone coming in through Boma Yangu, we're able to finance our customers. Then that thing under the icing on the cake is our discounted rate. Our role is to be able to offer a single digit, and that's why you can be able to know that we have two options. We have the 9.9% if you borrow for up to 25 years, or if you borrow up to 105%. And if you borrow below 90% or even below 20 years or up to 20 years, as a bank, we are able to finance 9.5%. You know that this rate is fixed for the term that you're going to take this mortgage, knowing that and what you want to be able to do is to be able to match your rental income with the mortgage repayment. What we believe in is that rent or paying for a house is one of the most expensive expense that you incur in your budget, and so that's why we're trying to be able to match the mortgage repayment with the rent that you have been paying. So for instance, if I'm able to show you maybe the next slide, if I'm able to show you, for instance, and highlight, for instance, if I'll be able to, if you're earning an income of in between 60,000 and 80,000, typically you are paying a rent income of in between 20 to 45,000. And with this, the expected mortgage value of, you can be able to get a property of in between 1.8 to 5.6 million. KMRC has been able to set, excuse me, has been able to set all the terms whereby you can be able to match, you can be able to borrow a property of 6 million in Nairobi and its environs. And I'm talking about Kajiado, I'm talking about Kiambu, I'm talking about Machakos. If you're buying a properties in these counties, you're able to borrow up to 6 million. Outside Nairobi and these counties, the maximum you can be able to finance is up to 5 million. This gives you an opportunity to be able to know if, for instance, I'm borrowing a loan of in between 1.8 to 5.6 million, at 9.9%, the repayment is in between 16,000 to 50,000. At 9.5, the mortgage repayment will be 17,000 to 52,000. You see all these now, what you're trying to be able to make sure is that the rent that you are paying, you're able to pay to your house or to the mortgage that you are paying, that you'll be able to acquire from NCBA, and at the end of it all, the house will be yours. The difference between paying for a mortgage and also paying rent is that you are assured at the end of it all, the house will be yours, vis-a-vis whereby the rent, when you're paying for rent, one day the landlord will be able to come and tell you maybe to get out of the house. And also we've learned this with during COVID. COVID taught us with the mortgage, a financial institution is able to structure a facility compared to maybe when you are taking, maybe when you have rent to pay, the landlord will still require the rent to be able to come in on monthly basis. So then there are advantages of taking up or signing up under the affordable housing, and we believe that we'll be able to match what you are currently paying. So we believe with this, we'll be able to scale up property ownership more so in the affordable housing space, and we'll be able to see more people, especially the young people, owning properties. There's an opportunity in the affordable housing market segment supported by the growing demand and the increased population. And as a bank that says go for it, we are flexible and we're able to work with our customers in the property ownership journey. So all what you need to do is to be able to walk into any of our branches. We are growing. We have a growing network to start your property ownership, or even you can be able to drop us an email and we'll be able to respond to all the queries, or even you can drop your questions in the chat, either Facebook or YouTube, and we'll be able to respond to them. Thank you very much. Back to you, Philip.
Thank you, Stella, for those insightful remarks, and equally for reassuring our viewers that NCBA aspires to be your financial partner that inspires growth, and that, of course, NCBA indeed encourages and supports our customers to go for their goals. Once again, to our viewers, please feel free to send in your questions using the chat box for those on Zoom. And of course, for those on Facebook and YouTube, feel free to use the comment section. I think I'm seeing a couple of questions that are streaming in, but as I have those questions populated for my view, I think I'll just jump back to Mr. Moura. In your presentation, Geoffrey, you mentioned that Kenya Mortgage Refinance Company has come in to resolve one of the key challenges in the affordable housing market. How is KMRC or Kenya Mortgage Refinance Company stimulating growth in the affordable housing sector? Which, of course, you've alluded to the fact that there's lack of affordable long-term finance, which KMRC is here to address, because I think the misconception out there is probably KMRC also offer loans to individuals. So perhaps you can just lend a perspective into what KMRC in a broader picture of what it does.
Thank you, Philip. Yes, when you look at the model, the business model of KMRC is that we operate at the wholesale level. So what we do and why we coming in at that level is that we want to offer liquidity facility to our customers. Here, our customers means the banks and SACCOs, because those are the direct customers that borrow from KMRC. KMRC operates at a wholesale level and does not do retail banking, meaning that we don't lend to individual customers. So we lend to the institutions, and these are institutions that are, one, they are regulated, either for the banks through the Central Bank of Kenya, for the SACCOs through SASRA, And these are institutions that are regulated and are serving their members. They already have a customer base that they are serving, and therefore they are able to manage the lending processes. They are able to manage the loan processes, and they're able to manage the risk of lending to the end consumer, and therefore they are better placed to serve those customers. And KMRC then does not come to compete with them at the retail level. So what KMRC then has done, KMRC is getting financing from development finance institutions. This is the likes of the World Bank and the African Development Banks. These are concessional loans that have been given through the government of Kenya. And with this, then, we are able to bring down the cost of lending to the customers. So what happens is that these banks, CBK being one, NCBA being one of them, has already is accessing funding from KMRC at a concessional rate. And with that, then they are able to on-lend to their customers at a discounted rate of less than 10%. So what this does then, it brings in affordability. The cost of home loans goes down. These are fixed rate loans that are being given in the market for long term. And with a fixed rate loan, what it does then, it enables customers to match their rent. The rent they are paying today can actually be equated to the monthly repayment at the end of the day. So that is how the model works. So what we've done with some of these institutions, and even in this forum we are today, we do a lot of sensitization, customer education. We do capacity building, where we work with our customers, that is the banks and the SACCOs, to ensure that they are able to offer that quality service to their members. So that is how the model of KMRC works. And this already looking at where we are today, 2 years down the line, we've been able to disburse an amount of around 8 billion to the market. So this 8 billion has enabled over 3,000 customers to actually get an affordable home loan. And when you talk about an affordable home loan, the houses are not only the houses that the government is facilitating through the what Ngatia talked about, through the State Department of Housing. No, that is just part of it. In fact, when you look at it, majority of the houses that customers then end up purchasing are houses that are being built by individual developers, because that is the bulk of it. Individual developers and customers also have an opportunity of buying a plot and building. So that gives options to our customers, so that for customers who want to go and build, they have an opportunity to build a customized house according to their preferences. Thank you, Philip.
Thank you, Maura. And I think the response you've given basically would answer the question we got from Damaris Kasioka Monike from LinkedIn. I think she said, hey, NCBA, this goes to Maura. After this presentation, I've understood that KMRC funds banks like NCBA who channel funds to us at a fixed interest rate of 9%. I want to believe that Maura has highlighted how the model works. For us to just suppress that question. I think I want to throw this to Mr. Ngatia. This is Francis Muzozo Goloba. Francis says, do you mean 16% VAT waiver is applied to general building materials, or it's a pre-sub only to developers? I ask this because prices of metal are very high.
Yeah, thank you, Francis. It is the VAT exemption is on a project basis, so it is not a general exemption on building materials. So it is provided to qualified projects that apply for the VAT exemptions, that go through the process together with the State Department of Housing and Urban Development. That process is a fairly straightforward one, where the developer submits their project, including their bills of quantities in the form of a master list and their drawings. Those drawings are then compared against what is in the BQs. And if the two match and the ultimate project is affordable in terms of the intended sales prices, the project is granted that VAT exemption. And what that means is that the developer will then now be able to go and buy materials, and their suppliers, the people who are selling to them the goods such as the cement and the timber and the likes, they will be authorized by KRA not to charge VAT to that particular project. So whereas before you'd go to your paint provider, and for each bucket of paint, they will charge you something on top. They'll charge you VAT on top of the cost of the bucket of 5 liters, for example. In this case, for your project, if it has been qualified, your supplier will be given the go-ahead not to charge you VAT, and that exemption or that authority will come from KRA. So it maybe one more thing to qualify that is it is only on materials. It is not on services. So the professional services side, like architects and the likes, that one still attracts VAT, but any inputs, building materials would not. But that is only for qualified projects. Thank you.
Thank you, Mr. Ngatia. I think I'll jump to Stella. I have a question here from Robert Okoth, who is watching us live on LinkedIn. What product does NCBA have for someone who already has land and wants to build? Also, which areas are currently sparsely developed, look to have growth trajectory in the next 10 years? I hope I got your questions right. I think the most critical part of this question is what product does NCBA have for someone who already has land and wants to build?
Thank you, Philip, and thank you, Robert, for asking that question. We have 2 products that are suitable for someone who already have or has land. We have construction products. Our construction product, this is where now you come up with your own construction team. That is the architects, the engineers, both structural and architectural, and the quantity surveyors, as well as the contractor. That's our construction product. But also, if Robert, you are very busy and you seem maybe not to have time to be able to supervise your project, we have our NCBA Easy Build. As the product sounds, is this product, we are providing the designs, off-the-shelf designs that you can be able to select. And these are available in our website under Property Finance Portal. You'll be able to see all the designs that we have, but also you can be able to share after this webinar. Also, we provide the designs. We also provide the construction team, and now the finances that come in from NCBA, which is our core business. So the 2 suitable products that I would recommend to Robert, and we can be able to engage after this conversation, is our construction product and an NCBA Easy Build. And then, Philip, you've asked about the areas that are sparsely developed. And for me, I'll be able to say it's areas outside Nairobi and its environs. And that's why some of these areas, if at all Robert is living in Nairobi, that's why when KMRC was setting the boundaries like for the 6 million, they're able to look at Machakos, we're able to look at Kajiado County, we're able to look at Machakos as well as Kiambu, and within these areas, I know you can be able to get pockets of areas which are sparsely developed, and I know in our property listing we have quite a number of properties, and Robert, we can be able to share with you after this meeting. Back to you, Philip.
Thank you, Stella. I think I have a question still directed to you, Stella. This is Ravi Kibet from Facebook. He says, if I have a loan in another bank and would like to buy a house in Twala, Rongai region, Ongong, will you consolidate the loan?
Maybe for that, maybe I would rather say that I would rather engage with him directly. And affordable housing, I know there's some guidelines that have been able to be set, but you can engage with him. Maybe after this, we can be able to have a conversation. I know some of the guidelines that have been set is that we may not be able to take over an existing facility because affordable housing has come in over here to be able to help us own our houses, either through purchasing a already constructed house, or buying an already constructed house, or constructing a house depending on our taste and preferences. So for that, maybe I would rather say we can engage with him after this conversation.
Okay, Thank you, Stella. Still on you. I have a question here from Lago Anjiku. Lago is asking this question she's watching live on Facebook. To NCBA Bank, do you have customers who've already started in the process of getting a home on their own? Then secondly, do you work with self-employed home seekers? Then thirdly, is your offer limited to persons listed on CRB?
All right. I'll take the first question. On our offer, is it available to people who are self-employed? I may say yes, our offer is applicable or is available to persons or to people who are working or employed, as well as also self-employed. And for this, we'll be able to look at their turnovers. One thing that you'll note, and I need to be able to mention here, there's an income range that has been able to set for you to be able to qualify for a house or for a property and affordable housing. You need to be earning 150,000 per month. That's household income of 150,000. So it's good for me to be very clear that these rates are not applicable for everybody, but these rates are available only for people earning or in business with an income of 150,000 per month. For a business now, we can be able now to go back and be able to look at 150,000 translates towards on annual basis, because you'll be looking at their cash flows and how the business is performing, which maybe for someone in business, it should be in between 1.8 million per annum. So that's what we need to be able to look at. The other question, maybe Philip, you can be able to mention the other question. You're muted.
Sorry, the other question was, I think, touching on CRB. Just let me get the question. I think the other question was just touching on CRB. Do we lend to customers who are listed on CRB? I think it was just around that.
I may say yes, and I may say yes. As long as you have been cleared by your financial institution that listed you, we are able to finance finance you, and all what you just need is for you to get a clearance to finance you. Being listed on CRB is not it's not a crime, but one, you just need to get a clearance from your institution, and for us, we'll be able to finance you.
Thank you, Stella. I think there's a question, a comment here from Liza. Are you okay? Liza, I think you saying you seem to concentrate on government supplied housing. Does the same goodwill extend to private sourced housing? I think Maura made it clear that we have individual customers or potential homeowners who are actually taking advantage of the relationship between KMRC, the State Department of Housing, through the government and NCBA to actually take advantage of the affordable housing rate that is currently on offer. I think there's an anonymous here on the chat box. He or she is asking, is the Kenya shilling 150,000 gross or net? I think Stella made it clear it's 150,000 gross household income. I think I have a couple of questions here to you, Mr. Ngatia. Yes, Charles.
Yeah, if I may just add a comment on the government supplied versus private sector. I think there's quite a number of private developers that are now encouraged by banks being able to provide financing that enables people to buy homes in this affordable segment. I think Gatia made a reference to that. And so if you check, for example, on the NCBA property finance page, you'll see quite a number of private sector developers as well that we are partnering with. If you visit some of their sites, you'll actually see our billboards on them that says you can afford this home, and NCBA is supporting that. So yes, government is an enabler both from a policy, tax incentives, and own developments, but there's also a significant number of private sector developers that are partnering with banks, including ourselves, that our customers can access as well within this segment.
Thank you, Tyrus, for that addition. And to Mr. Ngatia, I have Barbara logged in here on Zoom. She's asking, I registered for Boma Yangu as soon as it was launched, but it was was a bit hesitant to start saving, as I didn't know where the money was being saved or who was handling this. Could we get a bit more clarity on how this happens?
Sure, and thank you, Barbara, for the question. Yes, so Boma Yangu, like I mentioned, is the portal through which you register, but also save for the units. And the reason why Boma Yangu is so critical is because allocation is done through that system. So you must have saved up to 10%, up to 12.5% of the value of the unit that you are selecting to be even eligible for allocation. And the reason why this is important is, just as an example, for the Park Road project, which I mentioned, there were 1,300 units that were on offer, but we received applications for over 30,000 Kenyans. Now, how do you decide which of the 30,000 are you going to allocate these units? So everything is on a first come, first served type principle. Initially, there was some discussion and a lot of uproar around the whole idea of a lottery, and that was scrapped. So now it is all about, if you are to even become eligible, you must have saved for the value of at least the deposit. So if it's a 2 million shilling house and the unit is and the deposit is 10%, we need to see 200,000 in your account to do so. Now to your query about how this money, what's happening with the money is actually, it's being channeled through the National Housing Development Fund. The National Housing Development Fund has solid corporate governance structures. It has a custodian bank. So first of all, let me mention that this money does not go to government. Yeah, it sits with the custodial bank. In this case, we have 3 custodial banks, including NCBA as one of them. And then we also have an administrator, independent third-party administrator, who manages the day-to-day operations of the fund, specifically in terms of contributors' reconciliations, updating your statements, any withdrawals that you're asking for, and that is Zamara. And finally, your money earns interest as well. So when the money is when you have saved and it goes into the custodial bank account, that money is then invested by the fund's fund manager. In this case, it is Britam. So Britam goes out and buys typically government bonds. They're not trying to do anything risky with your money, knowing very well that that money is being used to secure a unit. And you might also want to withdraw that money at any time. So they will put that money into interest generating assets like government bonds, as they now wait for you to select the unit and wait for you to then now get allocated. So once again, you save through the system. You can save through M-Pesa. You can go to Huduma centers. You can go straight to the banks. That your money is then now your savings are then now reflected in your account, just like any other bank account you would have. But in this case, that bank account is held by NCBA and the other custodial banks. And then after that, you can then select your units, the unit that you desire, and move forward into the allocation process. Thank you.
Maybe I can add something. I can add something in regards to Boma Yangu. There's some new developments, and I know Gatia will be able to mention this, is that now Boma Yangu will be moving to the e-citizen platform to make it easier for our customers to be able to register. All what you need is just your common or the e-citizen password that you use in all other platforms, other government services that you use, the password that you use to access the government services. So Boma Yangu will be moving to the e-citizen platform to make it easier for people to be able to upload their details.
Thank you, Stella. Back to you, Mr. Ngatia. I have Frankie on Zoom. Frankie says, Mr. Ngatia, low-cost houses are particularly cheap. Particularly not cheap. I will explain. Using your example, a unit that costs 3 million for a 60 square meter, 3-bedroom house would be equal to over 50,000 per square meter. That's a very expensive house. A low-cost house should be in the range of 25,000 to 30,000 to make sense. What's your response on this, Mr. Ngatia?
My response is that, of course, we are trying to get the cost of the unit as low as possible. But that happens incrementally. Like I mentioned, at 50,000 shillings per square meter, we're able to deliver a unit in Park Road for 3 million shillings. That exact same unit in terms of size and finishes was going for over 6 million. So when you're talking about affordability, let's remember that we are coming from an environment where there were no affordable houses to begin with, to start with. You are looking at units that were going for 10 million plus. And with incremental steps, we've been able to take that from 100 and 120,000 shillings per square meter to 50. Now, with further interventions, especially if there's more supply coming in the market, what you'd expect is that there would be further discounts in terms of the cost of the materials. We are organizing the informal sector to make sure that they can produce the types, the quantities that are required, and that we don't experience any types of shortages, all with the aim of further bringing down the cost of these units. Now, to the price points that he has mentioned, the 20,000, 30,000. Yes, there is definitely a need for houses in that range. Right now, a lot of those units around that range are being catered for under the social housing programs. Now, social housing is right now being squarely financed by government. And what you typically find in that case, these are usually slum upgrading programs or slum upgrading projects like you'll find in Kibera and the likes. But for the purpose of this discussion, we wanted to focus it on affordable housing and just to highlight the significant progress made to get it to 50,000. Yeah. Now, with the aim, I mentioned the incentives such as corporate tax. I forgot to talk about that. If corporate tax can be reduced significantly, you can then now bring the cost of the unit further down. So it's something that you can expect to see that 3 million shillings go lower and lower with time as more supply comes into the market, as more demand is there through the likes of KMRC and mortgages and the like. So we are reviving, if not rebuilding, this ecosystem. And what we are seeing is that we have been able to bring down costs of construction significantly lower, and we aim to continue to do so. Thank you.
I think if I may add something to what Ngatia just said, that 2 million shilling home, cost about 18,000 shillings per month, if one took a mortgage for 20 years. And I think that's the perspective that we need to shift to. What is the rent I pay? And I know Stella flashed it on a screen where she said, it's very likely the rent that many of the customers in this segment are paying could be paying for a mortgage for a home they own. And so the affordability aspect as well, when mortgages become available, just make it more accessible. Obviously, if you've got 3 million shillings in cash, well, then you have 3 million shillings in cash and you probably don't need the mortgage. You can go buy that unit or as many units, or even use that as a deposit to finance a portfolio of some sort. But the key point here is the affordability as well, in addition to everything Ngatia said around standardizing, simplifying construction. They all look the same. A lot of customers say, why can't I have mine looking like this and like this and like that? Now that's where the cost comes in when you start to customize things. So they're fairly standardized. And a key thing is that, yes, one can build at 25 to 20,000 to 25, but it'd probably be 100 kilometers from Nairobi. But when you are able to do that within Starehe, now that is as close as premium as you can get in Nairobi. But the key point as well from a banking perspective is that rent you're paying, maybe the conversation you can walk into any of our branches where this product is available is to ask, I pay a rent of 10,000 shillings or 20,000 shillings. What mortgage can that help me access? And where might I find a unit like that? And you will suddenly find that rather than making a landlord afford more homes to rent, you're probably now beginning to pay for a home that you and your family can own. And that's the affordability play as well.
Thank you, Tyrus, for those insightful remarks. I think I have a question here for Stella, if I may. I have a question from Leo Masharia, who's watching us live from YouTube. Leo says, can one finish paying the mortgage earlier? Like a 10-year, if I took a 10-year loan, can I make a full payment while at it?
All right, thank you for that question. I may say yes, you can be able to pay for your mortgage earlier. For instance, if you take a term of maybe 10 years as they are stated, or even 25 years, you can be able to pay your mortgage earlier, and there's no one thing that you know that there's no penalty for early payments or even for putting in lump sum amount of money. Sometimes this also helps you to be able to fast track on your mortgage repayment and move into or to build in your property ownership or your property portfolios. If you're able to pay off earlier, it helps you maybe to acquire another property within maybe that time, or even as you continue investing.
And Stella, now that you're talking about property acquisition, I think Leo still goes by saying, what is used as collateral when applying for a mortgage?
Thank you, Leo, for that question. As a bank, or as a bank, we look at two critical things when you're applying for your mortgage. One, we look at your income, and that's why we stated that for anyone who wants to be able to borrow to take up a mortgage under affordable housing, they need to be earning around 50,000 and below per household income. So income is very critical, and the other thing is the property. The property is now our security or our collateral that is used for the term of that facility. So for those, anytime you are taking a mortgage, those two things need to be able to be in play, or we need to be able to have those two things. And like for instance, for NCBA, we finance like for instance, it's the 90% financing of the valuation or the purchase price, whichever is lower. So if I'm buying a property for 5 million and the valuation returns a value of 4 million, as a bank, we are going to be able to finance on 4 million. 4 million, since it's a 4 million is lower of the purchase price.
Thank you, Stella. Great discussions here. As we take center stage to wind up our webinar today in a few, I think I still have a question for you, Stella. I have Mato from Mato is asking a question from Zoom. Is construction product available in areas like Moy's Bridge, Kitale? The land is 12 kilometers to the main road. The main road, that is Kitale Eldoret main road.
All right. For us to be able to finance for this particular property, it needs to be within the county headquarters, or what we used to call municipalities. So for us to be able to charge that property in the bank, it needs to be within a county headquarter. And so to him, if that property is within the county headquarters, certainly we are going to be able to finance a construction facility on that property.
Okay. Thank you, Stella. I have Milimbedi here. I'll take 1, 2, or 3 before we wind up. I have Milimbedi, who's made a comment that where can I find the list of projects under affordable housing and projects under NCBA? I think both Stella and Tyrus alluded to that. We have our own very property listing that we'll be glad to share with you. And of course, on our website, we have our property portal that is currently hosted on our website, where we've displayed the different projects that are considered affordable. And equally, these are the projects that are outside that particular bracket. I think, let me see if I can get one more last question to to you, Stella. If I may.
Philip, as you get the other question.
Yes.
It's also important to tell listeners and viewers that through the KMRC website, there is also a property catalog where we try to put together a catalog of all properties that are coming up in the market from both the private and government projects, and they can actually go and see what is there.
Thank you for that valuable addition. And I think Mr. Ngati also alluded to Boma Yangu platform that has a list of affordable housing projects that the government is putting up in different parts of the country. Stella, one last question for you. This is an anonymous question. Hi, is age a factor to qualify for a mortgage?
Right, great. Yes, age, is it a factor to qualify for a mortgage? One thing I may say is that as long as you have an income and you have an ID that is from maybe say from 21 or even from 18, and you have an income, we can be able to finance you. And the maximum entry age for NCBA we say is 65 years. We can finance as long as you've got an income in between 18 and you have an income, or even 21, because we've seen now more young people getting into the job market, and 21 they have an income. We can say at 21 we can be able to finance you, and the maximum entry is 65 years old. Philip, you're muted.
Yeah, I think that's what we had in store today to our viewers. And at this particular point in time, I would like to move my closing remarks. First and foremost, I would like to express my appreciation to the panelists for your priceless contributions. In no particular order, Stella Mutai, who is our head of property finance at NCBA. Mr. Ngatia Kirungie, housing advisor at the State Department of Housing and Urban Development. And then, of course, Mr. Geoffrey Maura, who is the head of credit at Kenya Mortgage Refinance Company. Just help us amplify our webinar topic for today, which is realizing the affordable housing dream. There's indeed great takeaways from this webinar, and this has been made possible because of you and your invaluable contributions. Further, I would like to reassure our viewers that here at NCBA, we've positioned ourselves as a one-stop shop to offer solutions that are relevant, easily accessible, not just to property finance, but financing solutions to enable our customers go for it. Before ending my closing remarks, I would equally want to convey my sincere appreciations to our Group Director, Retail Banking, Mr. Tyrus Muthiga, for engaging us in this discussion today. I've been your moderator for today, Mr. Philip Omondi, and I welcome you to visit our property center located at Mama Ngina branch or any of our NCBA branches countrywide. We guarantee you convenience in your journey to property ownership and, of course, excellence throughout the mortgage process. Thank you all for being here today and taking your time to patiently listen to what we had in store. I wish you all a successful day. Goodbye and stay safe.
Thank you very much.
Thank you.
With our NCBA Bank Home Loan, we can finance up to 105% of your mortgage and give you a repayment period of up to 25 years.
Daddy, that is 25 birthdays for me in our own home. Many suppers together. Lots of laughter with mommy.
We know that it's not about the house, but the many memories made in it. Get an NCBA home loan with up to 105% financing. The name is NCBA, and the numbers that matter to you matter to us. NCBA Bank. Go for it.
With our NCBA Bank Home Loan, we can finance up to 105% of your mortgage and give you a repayment period of up to 25 years.
Daddy, that is 25 birthdays for me in our own home. Many suppers together. Lots of laughter with mommy.
we know that it's not about the house, but the many memories made in it. Get an NCBA home loan with up to 105% financing. The name is NCBA, and the numbers that matter to you matter to us. NCBA Bank. Go for it.